This week's video, I'm going to be going over a heavily demanded company, primarily because I went over BCE's earnings last week. They were pretty ugly earnings, to be honest, and that company is under a ton of pressure. TELUS, on the other hand, reported a relatively strong quarter. It caused a 4 or 5% jump in share price, and considering how beat down these telecoms are, seems like there's a bit of confidence injected back into this company after it posted what I would view as a pretty solid quarter. So we're going to get into the earnings report, where I'm going to speak on my overall thoughts on the telecom sector in general. And overall, it's just going to be an in-depth video on TELUS and its position in the telecom sector. As always, everybody, there is 3 free stock picks. You can head down below in the description and sign up for that. It's a great report, very in-depth, and it's 3 options that I really like for 2024 and 2025. But let's dive right into the quarter. So from a headline number basis, the company actually did quite well. We can see that revenue, $5.09 billion. It came right in line with estimates, but earnings per share beat by quite a bit. They reported earnings per share of 28 cents when analysts expected around 23.5 cents. So this is a 18.5% beat on earnings, which no doubt, especially because of all the added expenses these telecoms have in terms of interest expenses, things like that. A big beat on earnings like this, especially over and above what is expected, is definitely going to cause a pop in share price. Now, when I say a pop in share price, we can go back to TELUS's price over the last while. We can see it is getting absolutely hammered. Highs of $34 in 2022. What happened in early to mid 2022? Interest rates started rising, and since then, the stock has been on a constant downward slide. But the recent quarter does provide, a little bit of light at the end of the tunnel, especially as rates continue to fall. And overall, TELUS is the telecom I am most bullish on. I guess I should say, full disclosure, I own TELUS. I've actually been adding to it relatively aggressively over the last while, just because I believe there will be some sort of valuation multiple expansion, just because of the added free cash flow generation, the company's T-Tech segment, which is growing. It's essentially the fastest growing segment in the telecom sector out of the major 3. That is where I believe TELUS gets its edge, and I'm going to dive into the quarter here. So first, let's get into some key performance indicators from this company. And the one thing I want to look at is mobile phone ARPU. So this came in at 58.85, which is 3.4% lower year over year. And when I head to ARPUs here, we can see that, ARPUs, which is their average revenue per user. So this is effectively what the company generates on average every single customer it has in its mobile segment. So why is this so important? Well, ARPUs kind of highlight how a company can grow revenue from the same client base, essentially. So it doesn't always have to rely on new customers. And the difficulty with many of the telecoms right now is that ARPUs are either declining or they're flatlining. I mean, we can see as we lead up to the COVID-19 pandemic, at the end of the pandemic, 2023, things like that, when interest rates started rising, we pretty much saw these ARPUs stop growing. And effectively, when we look to December 2019, we have $59.30. When we head to 2024, we have $58.90. So this is not something that you really want to see. And effectively, the peak of the pandemic, people were spending more money, ARPUs were going up, people were probably buying more expensive phone plans, they were probably buying more expensive devices, things like that. And once interest rates started rising, that all pretty much came to a halt, and the company has reported it was here 4 straight quarters. There's a little bit of bump in quarter over quarter ARPU, so they're adding a bit, 40 cents per user. But effectively, when we look to on a year over year basis, it's flat. When we look to a 5-year basis, it's actually down. So effectively, what this ARPU tells you is that TELUS is going to rely a lot on new customers. And we head back to the overall customers, we can see that they actually reported one of their slower mobile phone additions in terms of customer bases in quite some time. So we're looking at 130,000 people, and that's 30,000 people lower on a year-over-year basis. So there is very, very stiff competition in the telecom sector right now. One of the main reasons we're seeing these ARPUs decline is because of the competition. People, they're getting a bit stingier. They're not going out and buying that new device every single year that they used to. And as a result, they're getting out of their contracts. They're not on a contract basis, so they're free to go wherever they are. And once you're off a phone contract, you can generally negotiate a much lower price on a year-to-year basis, month-to-month basis. You're under no obligation to stick with the company. So generally, you kind of have them at that point in time. And, if they're not offering you what you want, you can simply head elsewhere. And we're seeing this with slower mobile phone ads. And when we go to the overall mobile customer base, it is pretty strong. It's growing, since 2019, a compound annual growth rate of 3.06%. They sit at 10.1 million mobile phone subscribers, and this is ticking gradually upwards over the last 3 years. This looks relatively healthy. However, this is all primarily driven through new Canadians, whether it be people becoming old enough where they need a new phone, but most of this is going to be driven by immigration in Canada. Why is that? Well, Canadians are having less kids. It is so expensive to have kids in Canada that, Canadians themselves, they're having less children, fewer children. So as a result, our population growth organically is really not all that high. It's being fueled primarily through immigration. And there has been new policies in place where the Canadian government is going to cut down on the amount of immigrants they bring into the country. So I would expect this mobile phone ads, I would expect this to continue to face pressure. And where TELUS is going to fuel most of its growth is going to be from its T-Tech segment, but I'll speak to that in a bit. So we have internet net ads, 34,000 down year over year, security down year over year, residential voice down year over year. I don't know. It's crazy to me to think that landlines still exist. I don't know. Mobile phones are so popular these days, but they still do exist. But we can see there's a lot of pressure on a lot of the segments right now just due to the economic drawdown. There's just not as much activity, not as much people signing up for new services. But the one thing I do want to get to is some of the faster growing ends of TELUS's business. One, primarily being TELUS Health. We can see revenue, it's up 4% year over year. We can see that virtual care members is 6.5 million. That's up 1 million year over year. Digital health transactions, 161 million. That's up 10.9 million year over year. When we go to TELUS Agriculture, we can see they hit revenue of $100 million. I believe this is up. They don't actually list the year over year growth, but I believe this is up around 20% year over year. They're sitting at 5,400 customers. When we go to their T-Tech segment, we can see that overall revenue, 1.8 billion. It's up 0.7% year over year. We can see adjusted EBITDA, 1.7 billion. It's up 5.6% year over year. This is where the company is primarily making up for its lagging mobile growth is through those T-Tech segments. When we go to TELUS Digital, which this has been quite a controversial segment of the business for quite some time. A few years ago, TELUS spun out TELUS International. It was a very fast-growing segment of the business that TELUS effectively felt it could unlock that value by spinning it off, which made complete sense at the time. I mean, you have a pretty fast-growing technology company hidden inside a slower-growing telecom company, so they spun it out. At first, it did very well during the pandemic. It deals with things like digital designs, customer service, things like that. But once interest rates started rising, tech companies started scaling back spending in a big way. TELUS International got absolutely hammered. So we can come here to their current stock price. We can see that this thing IPO'd around $40. It was actually one of the largest Canadian technology IPOs ever. It's from $40 down to $5.43. It's gotten absolutely hammered, and we can still see here revenues, they're down year over year. We can see adjusted EBITDA down quite a bit. And even though TELUS spun this out, there's still a major shareholder of TXT. It's now TELUS Digital Experience. They rebranded TELUS International to TELUS Digital Experience, but the ticker is still going to be TXT, which is, TELUS International. But what is happening here is TELUS, it's a majority shareholder of TELUS International. So even though it spun it out, it still makes up around 10%, I believe, 10 or 11% of TELUS's total EBITDA. So this is definitely a segment of the business that is hurting right now that I do not believe will be hurting indefinitely. And when this does turn around, it does have a lot of potential to help TELUS and vault its results. But overall, for the company, we're looking at, again, revenues, they're up 1.8% year over year. We saw a company like BCE, they're reporting a decline in overall revenue, which is ultimately not good. We're looking at adjusted net income. It's up 11% year over year. And the one key factor for this company right now, we're looking at free cash flow of $561 million, which is up 58% year over year. And one of the main things, like I said, and I've always said about TELUS, is it has faster growing, higher margin verticals that are kind of causing it to outperform the other two telecoms in terms of overall growth. I mean, when we head here, we can see this would be their internet subscribers. This is typical of any telecom company, but we can see a pretty consistent increase, a 6.92% compound annual growth rate over the last 5 years. When we head to their mobile phone subscribers, again, we've seen this was relatively strong. When we head to their security subscribers, we can see, TELUS has pretty much almost doubled their overall security subscribers over the last 5 years. So that's a segment that's growing quite well. We have TELUS Health that's doing quite well. We have TELUS Agriculture that's doing quite well. There's actually been a lot of rumors that TELUS will spin out TELUS Health. There's nothing confirmed. I don't really know if TELUS wants to go that route right now just because of how badly TELUS International has done. They'll probably want to regain a bit of investor confidence before they spin out that company just to get maximum valuation. And just considering the overall environment right now, I'm not exactly sure that would be the best route for them to go. So when we look to free cash flow, the generation is actually pretty strong here. I mean, FinChat is reporting $753 million. I would imagine this is some sort of non-adjusted figure, whereas TELUS is reporting consolidated adjusted free cash flows of $561 million. Either of these free cash flow numbers does kind of indicate that the dividend should be well covered in 2025. It's not going to be quite covered in 2024, but that was to be much expected. I mean, we have a dividend of around $1.60 a year on shares outstanding of 1.42 billion. So the company's paying out around 2.3 billion in dividends. And when we go to the overall 2024 financial targets, it expects to generate free cash flow of around 2.1 billion. So it's not going to cover the dividend in 2024. But when we look to free cash flows of 1.408 billion over the last 12 months, we can see that this is expected to improve quite a bit, around 50%, and that does make sense. The company reported a 50% increase in free cash flow generated a quarter on a year-over-year basis. And overall, the company should be in a pretty good position to cover the dividend in 2025. We'll have to see what type of guidance they issue in 2025 to see that. Capital expenditures are expected to come in at 2.6 billion. And when we look to the cash flow statement from TELUS, let's go to annual here. And if we head down to capital expenditures, we can see they spent 3.2 billion in 2023. So we're expected to see quite a big downgrade in terms of overall capital expenditures. And I would say when they announce their guidance for 2025, this is going to come in even lower, which should support more free cash flow generation. That is why I expect TELUS to get inside that dividend coverage range. The dividend looks to be fine. When we look to overall guidance, they primarily issue T-Tech guidance, so their technology areas in terms of operating revenues and adjusted EBITDA. So they expect 2 to 4% growth in that end of things, and they expect adjusted EBITDA growth of 5.5 to 7.5. They do expect this to come in at the lower end of the range, and they mostly state that because of TELUS International, TELUS Digital, I would say. And what that caused the company to do is they used to be guiding to 2.3 billion in cash flow. That's now been downgraded to 2.1 billion. So it's a bit lower, but it's nothing really overly concerning. And this caused the company to raise the dividend. TELUS typically gives semi-annual raises to the dividend. It's typically around 3.5% every 6 months. And they ended up doing this. So they've raised the dividend around 7% this year. The main thing here is the coverage ratios are a lot better than a company like BCE. BCE is reporting a decline, a 3 to 11% decline in annual free cash flow. That's what they're guiding to this year, whereas TELUS is expecting free cash flow growth to pick up materially. So I can see why the company is raising the dividend, and I can see why BCE has suspended dividend growth. BCE needs to make up, I believe, around $800 million in free cash flow just to cover the dividend this year. They're not going to be able to do that, and there's a lot of uncertainty, and I mean, not a guarantee, but a practical guarantee that they will not cover it in 2025, whereas TELUS, I do expect they'll be able to cover it in 2025, which is a very key metric for telecoms right now. Their free cash flow generation, all eyes are on that, and TELUS is doing a relatively good job right now of kind of shoring up the balance sheet, cutting back capex, boosting that free cash flow generation, and overall just reporting relatively strong results. If we look to free cash flow generation in 2024, if they do hit that $2.1 billion target, they're trading at around 15x their expected free cash flow for 2024. This is a typical cheap valuation for Canadian telecoms, which is why I actually have been adding to TELUS as kind of a short to mid-term hold over the last while. I do expect this to expand. What it expands to would be difficult to predict, but I would say 20x free cash flow would not be that outrageous, especially when interest rates continue to come down, sentiment returns to the industry. It's not a crazy thought to think that this company could trade at 20x expected free cash flows. And, at 15 right now, I do believe that there is value here with TELUS. Would I buy Rogers or BCE? No, this would be my telecom that I would add to. Would I hold them long term? No. I believe the difficulties in the telecom sector from a regulatory standpoint, from a immigration standpoint, all of that, I believe these companies are really going to struggle to grow over the long term. However, I do believe that there's a valuation disconnect here just because of how bearish the market is on them right now. And I also do believe that TELUS is probably in the best position to grow moving forward just based off that T-Tech revenue. They have those higher growth verticals where BCE and Rogers simply don't. They're kind of hampered down. They have, the lower margin, higher expense media divisions, things like that, where TELUS is more so focused on the technology aspect of it, the security, the health, the agriculture, TELUS Digital, which is currently in the absolute dumps right now. And I do believe we'll see a bit of a uptick based on, increased economic activity as interest rates go down. And for that reason, I'm bullish on the company over the short to midterm, but not necessarily the long term. So I have been adding to the company with anticipation of that valuation multiple possibly expanding. And then I would look to sell when that valuation multiple, or if that valuation multiple is realized. I realize this is far from guaranteed, but it's been something I've been doing as of late. So everybody, I hope you liked the video. If you like more earnings reports, me going over earnings reports like this, just drop a comment down below. Let me know what company you want to see. This was a very heavily demanded company, so I went over it. I read every single comment. I reply to every single comment. I love hearing from you. I love hearing what companies you want me to look at. So head down below, drop a comment. And remember, like the video, subscribe to the channel, and grab 3 free stock picks. Some of my research down below in the description. Absolutely free. And we'll see you next time for more great investing content.